The first question, of course, is this the right time to enter the stock markets?
Yes, I think it's a wonderful time to buy in. Where you're kind of lucky if you don't have any exposure or if you yet have money to add. The markets are coming down, I think, for all the wrong reasons, for price, for basically based on money flows, as I indicated. It's giving you a great opportunity to buy good companies at even better prices, at better valuations. So yes, it's a great time to buy. And again, to me, the best way to put money in is through a systematic investment plan if you're in a mutual fund. And if you're buying stocks, look at your cash flow, your free cash every quarter or every month, and then call your broker up and add more to your portfolio and build your individual stocks and track it up on the portfolio tracker of Equitymaster. But yes, I think it's a wonderful time to keep on adding. India is going to give a great rate of return over the next few decades. Please just follow history. From 1980, the index was 100, the BSE 30 index. Even after this correction, the index is 15,800. That's an appreciation of 158 times over 30 years. So just follow, and that's much better than putting money in fixed income deposits or bank deposits and probably most kinds of real estate. Right? May not be true for South Bombay or some specialist property in this Connaught Place or maybe MG Road in Bangalore. But for most property, compared to most properties, equities have done far better. So with a long-term view, great time to buy.
So, okay, one is this SIP approach. What if I had money in the bank today? Should I just go out and invest, or should I stagger it over the next few weeks, months?
If you have nothing in equities, I would urge you to put half of what you want to buy into equities immediately. And the other half, do it over the next 2 years or 3 years.
Okay.
Right?
Okay.
If you have already money in equities, so I need to understand your actual allocation to equities today and what's left over in your bank account, if you will. But I need to have a dialogue with you on a one-to-one basis. But my immediate thing is, if you have nothing in equities, you've been given a great chance to buy, and it may go down further. That's fine. Don't worry. Go into stocks with a multi-year view, not with a 1 month view and a 3 month view. And oh God, this index of 21,000 may not happen. This guy's talking nonsense. Forget all that stuff. Okay. The index of 21,000 is to make you guys excited, right? It's not the end result of the index. The index could be 100,000 in, 10 years. Who knows, right? What that number is going to be, but it's going to be upwards. So buy.
Great. And, when the one thing that is coming up more often is in an opportunity like this, what do you go out and buy? Because stocks that fall the most are usually the penny stocks and the small cap stocks, right? So do you have a view on what should one be buying now? Are you looking at buying blue chips, or you think you should go and buy the penny stocks out there?
Well, from my perspective, I look at the stock market, and I have a chart on this in the presentation on slide number 13. There are many companies here that I would not touch because from my perspective, again, I love to back companies in good businesses with good managements. So I will not give any names, obviously, because if my job as a founder and as a promoter of Quantum Long-Term Equity Fund is to urge you to give me money so I can manage it for you through the fund management teams. But I would be very wary of buying companies that are highly leveraged. I would be concerned about buying companies run by managements who have shown us in the past that what they are really doing is gambling and hoping that their business plan works out, as opposed to having a proper structured execution, to reach the growing Indian consumers or the export opportunity, if that may be. So I'll give you a vague answer. I cannot give you a precise name answer, but I would say look at slide 13, and you've heard what I've been saying in the past and what I've been writing in a place like The Honest Truth. And you'll be able to find out which companies here you should avoid and which you should be buying.
Okay. Let's step back a bit and let's talk of, let's say, the next 3-5 years. And where do you see, or which asset class do you see performing the best? And if someone were to invest for a 3-5 year horizon and not really for the 10, 20, 30 years, where is it that you see the big opportunity?
I see equity stock markets as a big opportunity. I'm optimistic again because GDP, I think, will grow by that 6.5% or so on average for each of the, till the year 3 and year 5 at least, and could grow further if we have better infrastructure plans and better infrastructure spending. And we could even grow at 8% per annum on a consistent basis for the next 3 or 5 years. But I would buy equities for sure. That's a no-brainer. Gold is, to me, more of an insurance. Again, it's because I haven't quite understood how the US, UK, Spain, Europe, all these guys, I haven't understood how are they going to get out of the mess they're in. The answer so far is we're going to print dollars, we're going to print money. If they're going to print money, then you better buy gold. Because gold is a wonderful store of value. Real estate as an asset class for an investment is a function of corruption in the country. It's a function of the power of the developers' lobby within India. There is no reason, absolutely no reason, why property prices in India are still as high as they are. There is no fundamental logic for property prices to have increased from their lows over the last few months, whether it's in Chennai or Bangalore or Delhi or Bombay. But the illogical reason, of course, is that there's a huge corruption going on between the banks and most of the PSU banks. I wrote an honest truth on this, where the PSU banks have taken your money to keep the developers alive, and the developers are kept alive and they don't sell their stock at low prices to you. But because they have loans from the bank, they're able to now sell you the same property per square foot at a higher price. And the political triangle, sort of keeps this whole thing closed. Is the connection with the politician, because they get their fair share. I don't know in what shape or form. Whether it's partnerships with the real estate, barons. But there's an unholy nexus between the three, and that's what's keeping property price away. Will that crack? Will that be allowed to unravel? I have no idea. But I would not invest in property as an investment. You need a home to live in. Please buy one.
Okay.
Then don't worry too much about the price. As long as you can afford it, buy it.
Let's say if it was an ideal scenario and this nexus was to unravel, what kind of a correction would you see in the stock, in the property prices?
I'll keep South Bombay out of the equation, but I think for most properties, which are in central areas, if you took MG Road, if you took Connaught Place, if you took certain central locations, property prices should be 5,000, 6,000 rupees a square foot.
Okay.
You go to the periphery, you go 3 kilometers outside that periphery, property price should be down 20-30%. You go 10 kilometers out, they should be 2,000 rupees a square foot. You go 20 kilometers out, it should be 1,000 rupees a square foot, max. I mean, to me, that is the way property needs to be. That's the way the government planning has to be done. City planners, state election officials, state government officials. That's the way they need to plan for the people. How do I build cities, townships, infrastructure, with these sort of concentric circles, like with the core, and then each time someone is away from the core, there's a discount on the price to be away from the core, and there's a premium to be paid to be in the central part of the city. But unfortunately, none of that planning happens. No. But I think by default, that's what's happening. Yeah. A property price in South Bombay is absorbently high. It's stupid. Why is it high? Because there's no power cut in South Bombay. There's no water shortage in South Bombay. You're really living in an island, in some sense, an island from the rest of India. Right? Because every other part of India has power cuts. Every other part of India will have water cuts, not South Bombay. So people with the money will happily pay for that facility to get power throughout the year and get water throughout the year. But if you go towards Thane, property prices are a lot lower there. Even though there may be business districts growing there, where are the clubs, where's the roads, where's the infrastructure, where's the certainty of power, where's the certainty of water? But if you really develop Thane properly, right, which I hope that some government does it one day, people will want to live there out of choice.